Good morning, guys. It's Wednesday, August 9th. A lot to cover here. A lot of information. Okay. We had a ton of earnings releases. Look at this list. We're going to go through them at a high level. And there's like two or three that I think I've found here that might be good. Also, what do we got? We have CPI tomorrow. Usually today, we have our Tuttle trades at 12 p.m., but I think that's got to be rescheduled. I saw a note from Chris Tuttle he said a couple days ago, and I missed it. I just saw it this morning. So that may have to be rescheduled. And I will now this week, I'll remember to do the Zoom after hours at 4 p.m., although it'll be like watching all the earnings coming in. All right. Wednesdays at 4 p.m., we're resuming our Zooms. So look at all these earnings, man. Big list. Okay, I got Celsius was the best report. I mean, they just blew it out of the water. This is one of our larger long-term positions, and we're not selling. We're holding this. And look at this. Let's just show you the magnitude of the beat here. 52 cents beats 29 cents. Look at the revenue. 326 million beats 274 million. Okay, guidance, but I did hear from the conference call. I saw people tweeting about it, who know the company really well. Jonah Lupton and a couple others. And they're saying international expansion. Things are going really well. Look, I've been saying from the very beginning, don't even bother trading this. Just buy it and hold it until Pepsi buys them out. It's as simple as that. Okay. And wow, look at that. A lot of good things happening right now. All right, Apron. We'll get to Apron in just a second. All right, Twilio. All right, we'll cover Twilio in a second on the morning show list. And I'll just point out Kodak had earnings, but it was nothing to write home about. Okay, nothing to write home about. SMCI, we're going to cover on the morning show list because I think this is a buy the dip situation here, down $50, 15%. We'll get to that in a second. Docs, man, they missed really bad. And I put in the app last night. This is probably a short, and it did end up being correct. We didn't short it. We tried, but we just put a limit order and didn't happen. All right. And then other things to really point out, PSQH, Apron. Okay, I'm going to talk about that on the morning show list. Roblox missed. AGRX had a really good ER, but they still need to raise money. I'd stay away from it. It could pop, but I mean, it's just dangerous. Toxic financings, ATMs can come and knock it down. Be careful with that. GoodRx, we sold our position this morning. We had a long-term position. I got out at 850. I did not like the guide. They cut the top end of the revenue guide over here. Look, Q3 revenue 186 to 190 versus 192 million. They cut the full year revenue guide. So we had a lot of great catalysts, and we rode this up nicely with it was a CVS deal, and then big analyst upgrade, and we're out. Okay, we got out at 850, and we'll monitor it to see if it makes sense for reentry. But as of now, I think I'm just going to let it settle in and see where it settles at. You got support here at 760, which kind of coincides with the 20 DMA, and that gap over there at 675. So I'm staying out of Dodge right now. Got lucky to get out at 850 this morning. All right, we'll cover Penn in just a second. They had earnings, but the big news is the deal with Disney and ESPN. And Tableau had good earnings. Tableau had LL was terrible. Oh my gosh. Thank God we're not owning that right now. Tableau had good earnings, but it wasn't like a blowout. So I just didn't chase this one. Could have gotten it at 355, but all right, Tableau had good earnings. You got the resistance there at 377. All right, that's kind of like the major ER overview. Look, Axon was not on my list. I missed it, and they had a blowout, okay, but was not on our list, so we missed it. All right, let's go to the morning show list, and a couple of those are in there, the ones that I think I'm more interested in playing or may already be in them. All right, so morning show list. Celsius, right at the top, all right? Now, I can't tell you that if you buy it at 168.79, you're going to make money today. I don't know, but I know that you'll eventually make money, okay? It's tough to recommend the stock when it's up 18%, but as of now, look, it's at the top of the list. And the last couple times they blew out earnings, it did have a further surge right at the open. So it's definitely possible this thing moves like another $5-10 right at the open. But if it doesn't, all right, okay, don't kill me, right? So just wait, all right? This is a long-term hold. SMCI, this is really interesting because the quarter they're currently in was a little bit light on revenue. And initially when I saw this, I'm like, get out of Dodge. We sold yesterday. I don't remember yesterday morning. I think we told you. We sold our SMCI yesterday ahead of earnings. It was just up so much. And it ended up being a saving grace here. But anyway, when I saw that revenue, I'm like, you got to have a big revenue beat, big guide beat to keep the momentum going. So the initial reaction was, oh, this is bad. The revenue guide is basically in line for the quarter. And the range, the low end of the range was actually below the average analyst estimate. So they left the room to even miss a little bit on the revenue guide for the quarter. So my initial instinct was like, wow, get out of Dodge. This thing can go to, the 50 DMA over here at 281. That maybe it still can. But then I got a hold of, I saw some highlights from the transcript on the conference call. And even in the press release, the revenue guide for the full year, which started July 1st, okay, because their fiscal year is July 1st to July 1st. The revenue guide for the full year was well above analyst expectations, well above. Let me just see if I can get the number on the revenue. Okay, so analysts were at 10 billion, and I think they said something like 15 to 20 billion, something really, really huge. Actually, let me see if I can find it. All right, let's get into here in the business outlook. There it is. Okay. For fiscal year, oh no. Okay, no, I'm sorry. It was okay. 10 billion at the midpoint versus 8.4 billion. Okay. So their revenue guide for the full year is exceeding analyst estimates by. So on the basis of that, and they tell you the reason why it has to do with all this AI stuff, right? That new product rollouts and stuff like that. So on the basis of this big revenue 2024 beat, I think the pullbacks are buyable. So it's going down on this quarter being light, but I think it's a buy for the long term because of the 2024 guide. So that's basically the story. That's the way I'm looking at it. So now that you're down here, I see supports at 281 and then 277, that 50-day moving average. So if it gets down there, I think it could be a good entry. All right. Might even be a good entry here because if you do the math, this is actually now, I did the math I translated what the EPS means at 10 billion midpoint for 2024 based on their current ratio of EPS to revenue. And it comes up with a 20. It's trading right now. Actually, when I did the math, the stock was 315 last night. So at $315, it was trading at 20 times 2024 earnings. So it's still at 20 PE. It's still very cheap. So like fundamentally, it looks a little cheap, right? But when you take a look at the sentiment of, hey, this revenue wasn't a huge beat, and now you're below the technical. So when you look at it story trading style rather than a pure fundamental investor might be buying this hand over fist right now at 297. I prefer to wait to see if we pull back to these support levels to around 280. But then at a 20 PE, this thing can still go much higher. And I think eventually, maybe 12 months from now, it might be over $400. All right. So that's the story with SMCI. Look, those dips look like they're buyable. Celsius looks like it's ripping into the open. All right. So those are like the highest two quality stocks we got up here based on the earnings reports. Okay. Now, Penn, man, I did a lot of research on this. So I don't know if I can get into all of it, but let me just say this is now a battleground stock, right? They're doing a deal with Disney to launch ESPN Bets. Actually, they're rebranding Barstool Sportsbook to ESPN Bets. So the app is already existing. It's being rebranded to ESPN Bets. And DraftKings went down big on that. And Penn was up huge. It peaked out at like $33 in after hours yesterday. Now back... look at this volatility. It's crazy volatility because it's a major battleground stock. A couple analysts came out defending DraftKings this morning. It was one with a big price target increase too. Citigroup. Okay, Citigroup came out with a $41 price target. And then JP Morgan says upgraded to neutral. So, I mean, this is the way I look at it. I did hours and hours of research on this last night to understand the pros and cons. It's all about sentiment right now. There's no way anyone can do any kind of like real quantitative analysis and say, this is buy, this is a sell. It's all about speculation and sentiment based on what people feel. How would ESPN Bets, how would they do? How would DraftKings, but the sentiment out there, and it's the overwhelming sentiment, is that the Penn app is really inferior to the DraftKings app and the The other one, there's another one. It's FanDuel. And also, like, it's as far as brand penetration, they already have like all the major, like everyone who's into sports betting, everyone knows about DraftKings. It's going to be hard to get into that. So the way I look at it, though, is that ESPN. I never bet in sports, and when I heard of, oh, ESPN's doing ESPN bets, well, oh, now it's something that's legitimate, right? Now it's something that, like, I'm not a big guy, sports betting guy, but like maybe I'll do it now, right? If ESPN is doing it, it's like mainstream, it mainstreams it. It mainstreams it, and I think that they could have a level of a good level of success. By the way, like ESPN, the marketing reach of ESPN is very big. Like their app rankings are much higher than DraftKings app rankings, like order of magnitude higher. So even though there's like really bad sentiment around ESPN and they're firing people and it's a dying company, this is a sentiment you see on social media. Like that might all be true, but it's still like 10 times larger in terms of brand reach than DraftKings. So I think the situation here might be that this is good for DraftKings long term, but also might be good for Penn and Disney. Meaning, I think they're going to be increasing. This is just my speculation and my analysis after hours of research I did. I think they're going to be increasing the TAM. Their Penn, this ESPN bet is going to bring in a lot of new people, but maybe the DraftKings folks are right, and it's not going to hurt them because the hardcore bettors will still be there. And now you have a whole group of new people mainstreaming online betting. Now, we don't know, would that be profitable? Are these the type of people? Are they making large enough bets? Are they betting often enough? Maybe it's not going to be profitable, but I don't care about what's going to happen 5 years from now right now. I just care, like, what's the sentiment around the stock? Is it going to go up or down in the near term? And so this is a major battle. I'll tell you also, not that it matters, but Jim Cramer came out this morning and said, do not bet against Disney. And he likes the deal. He was talking about Disney, though, and how $1.5 billion over 10 years to Disney for this deal. You can see Disney's up this morning, and they have earnings tonight, by the way. Look at that. Ooh, wow. Disney over the 50 DMA. This may have a good day, Disney, but they do have earnings tonight. But wow, a lot of good sentiment surrounding this deal for Disney. Okay, so what can I tell you is I think DraftKings is still good long term. But I do worry that it's going to. I did reduce our DraftKings last night. I do worry this is going to go down short term. You see the 50 DMA here at 28. There's a lot of defenders of this stock, though. Lots of defenders. And I think they make a good point. And I do think that it's possible that this ESPN Bets app becomes a funnel to bring people into DraftKings, right? So, like the amateurs, the people who are starting out betting might start out with ESPN Bets, and then they might like it, and then they may get into it and say, oh, but DraftKings is better. They have better technology. All the major people who are really into this are over at DraftKings. So I see the argument that everyone's trying to make, and I think everyone's right. And that's why this is like a battleground over here today. And Penn is just like crazy, crazy volatile. By the way, that earnings this morning, and they beat as well. Pretty nice beat on the bottom line. 48 cents beats 42 cents revenue in line. So all I can say is, I don't know. I can't tell you right now. Is this a buy right here? No, I can't tell you that. I can tell you there was resistance at $33 in after hours last night. Let's look at the chart over here. Let's see. We have 200 DMA, so that might be support if it holds 29.50. Wow, if it does hold, actually, let's look at that 50. Okay, if we close over this 50-week moving average today at about 29.17, then maybe we can run for a couple of days. But this is just a battleground stock, a lot of chop, probably good for trading. And long term, I think it's good for DraftKings, but it might go down to like 28 first. Okay. So, other thing I want to point out is Genie. Apparently, Genie has a deal with Genie might be the sleeper play here today. First of all, they had good earnings and it sold off on good earnings the other day, and all the way down now here to the 50 DMA. Okay. So they're at the 50 DMA. A lot of stocks have been selling off on good earnings just because of the moment we're in right now. But Genie had a deal that was in 2021 to, I don't want to say power, but some of the technology backend, I think, for the Barstool Sportsbook app. And now, if that's getting bigger, does that mean more money for Genius? But the other thing I'm not sure about is that deal still active? Because Penn did come out with a press release about 3 weeks ago, mid-July, saying that they've transferred, their entire technology stack in-house. Now, I don't know if that means Genie's no longer involved, and I can't find the answer. I've been trying to collaborate with people on Twitter and StockTwits, and nobody knows. And everyone's aware of this, that there's some sort of relationship, but nobody really knows if that relationship is still happening or if they can benefit from it. But the fact that I think it's just optionality upside here, because we're already we already had good earnings. We're off the 50 DMA. So this deal can't be bad for them. It could only possibly be good. So I think Genie could possibly be a sleeper play here today in case it's true that Genie can benefit from, a much larger ESPN Bets app. So that's up here, going to be at the top of the list. Now, Twilio, man, I've been watching Twilio for months. We did get this last night. We're in this stock. I have a $66 price target on it for today. So Twilio, I've been watching it for months because look at this. This is a former growth stock, which has not had its, arcade type of move that all the other growth stocks had, right? If this was in line with other growth stocks, it would probably be up in the 80s and 90s already. But it's sitting down here at the bottom, and they had a good report. Okay, and I looked at their earnings, and look at this. They raised their operation income from the range of 275 to 350 million to 350 to 400 million. I think that was 18% when I did the math on that. And that's where I get that 66 from. You could do the math again, correct me on it. Just take the midpoint of 275, 350, the midpoint, and then 375. And then you can do the math on how much they're increasing their income. So that looks like a buy to me. But I will note that their revenue has really plateaued. Last quarter, this quarter, and the guide for next quarter is about $1 billion a quarter. So while they've been like a hyper growth company for the last many, many years, in the past year or so, the revenue has like plateaued, and now they're trying to, get some income out of it. So it's starting to look like a value stock for now. If you do the math on that income, it's what was it? I did the EV to EBITDA is like 14 or something. EV to forward EBITDA on Y charts is like 14. It's trading, the EV to sales is 2. I mean, these are really low numbers for a quote unquote growth stock. But again, the revenue's plateaued this year. I think it's going to be accelerate at some point. But this is starting to look appealing to me just on the strength of the operating income being increased. I'm in this looking for $66 on the re-rating. It's not very clear. A lot of chop in here. So I don't know. It's that's just the math, 66. So somewhere in here, hopefully above 65. We want to see the 50 DMA break, and then somewhere in here, maybe we'll sell some and maybe we'll hold some, because this is like, it's not often that a growth stock kind of turns into a value stock with optionality to upside if the growth resumes. So Twilio is looking interesting. Look at Celsius up at 170. Beautiful. All right. 1 second. All right. Apron had earnings. And the numbers were nothing to write home about. The press release was nothing to write home about. But I got some notes from Niraj, who was listening to the conference call, and the notes are really positive in terms of continued hints at further M&A, in terms of trying to unlock the collateral they have. I forgot his first name, Sandberg, who owes them like a lot of money, trying to unlock that collateral in terms of the guide for profitability for Q2 24. But I will warn that this guide for profitability in Q2 24 is, I think it's adjusted EBITDA. There it is. Adjusted EBITDA. They're saying they have enough cash to get to adjusted EBITDA profitability. That's not enough, right? You need to be a cash flow positive, because this still leaves a room open that they need to raise more money, right? But maybe they can get that money from unlocking that collateral. So at the end of the day, I still think at this point, if you put it all together, I still think this is 5 to 10 bagger potential. And net, today's comments are probably good. I don't think it's enough to cause a rapid re-rating to see the stock move up 100%, 200%. That's not going to happen until they can say we have enough cash to reach cash flow positive, right? That's the trigger for these stocks to really explode, because people want to know there's absolutely no chance of an offering. All right, we're not there yet. But the fact that they're talking, more intensely about unlocking the collateral from, I think it's Joe Sandberg, I forgot his first name, unlocking that collateral, definitely the commentary, both in the press release and from what I'm hearing on the conference call, is picking up. their intensity of that conversation and conversation around M&A. So I think the sentiment there is probably people are going to start feeling okay. That, and by the way, there's an existing ATM and they haven't really tapped into it this past quarter. So that's also a positive thing. So I like this. I think this is a good stock to just own, and the risk reward is really good. I don't know about today. We have a small position long term at this point, and we're just waiting for like a potential 5 to 10 bagger move. And if and when they come out and say, "Hey, we now have enough cash to reach that profitability," that's when I might, like, for the day or for the week, really massively increase the position. But not going to increase it for today, though. All right. PSQH had earnings this morning, and there's an ongoing conference call right now. I got to listen to it later. Personally, I was actually surprised they have this much revenue. This is a very young company. They just started. $529,000 in sales, up year over year from 72,000. If you look into the details over here, it looks like revenue is really accelerating here just after the quarter ended. They have this first direct-to-consumer brand launched on July 13th, 300,000 revenue in 19 days. So there's like some good things going on here that really kind of surprising me. And if you look at some of the metrics they're giving here, you can see that the growth is really accelerating from Q1 to Q2 and now Q3. Okay, so really accelerating revenue growth right now, which I think is a positive. Stocks selling off on the headline of EPS miss of $23, which I think that was like a non-cash charge or something. I think they explain it in here. But it doesn't mean anything. Really, what's important is the revenue and the revenue growth. So it's nice to see such a young company have, some material revenue and some rapid revenue growth. So we'll see. I have a feeling the dips are going to be bought here today. We'll have to see. And we're still waiting on this. This has been my target. I'd like to sell this at 15 to 20 bucks. I don't know if that's going to happen, but still holding, waiting for that next like Tucker Carlson pump. And that's when we'll exit on that one. All right. Hims did a lot of research. This is a failed trade yesterday, and unfortunately, we're down big on this. Did a ton of research on this, a bearish engulfing candle, which might be a bad sign for today, but did a lot of fundamental research on this to understand what's going on, who's selling this, and there are two things I finally came up with. One is they're reducing their prices for the long-term packages. People pay for 4, 5, 6 months in advance rather than paying month to month. That in order to reduce churn and gain market share and things like that. That was on the conference call. To me, it wasn't such a big warning sign. I read through the transcript yesterday morning and I'm like, okay, that's routine. I own a dating site and we do that kind of stuff. And I don't think it means anything negative, especially since they're still raised both the top line and bottom line guidance. So it was a little surprising to me, but I saw some chatter about that might be one of the reasons why it sold off yesterday. The other reason is there's some disappointment apparently over the fact that their weight management program that's launching in December is not launching with accessibility to the GP1 inhibitors, which are so popular, which is causing Eli Lilly and Novo Nordisk stock to absolutely explode. Oh man, we should have been on that trend. Those stocks were up 15 to 20% yesterday on new study data from Novo Nordisk that their GLP-1 inhibitor decreases cardiovascular side effects by 20%, cardiovascular complications by 20%, events, which I should say events by 20%. So anyway, a lot of excitement over GLP-1, and looks like analysts were expecting, if you go back and read the transcript and the Q&A, they were pressed on it 2 or 3 times, hey, how come you're not going to be offering GLP-1 through your platform when you launch in December? And that may be part of the disappointment. Now, they didn't say they're not going to do it. They just said they're taking their time doing it. They're worried about 3 things. They're worried about potential side effects of GLP-1. They said it's still new on the market. We just want to monitor it more. We want to know, what the situation is. If we're going to offer it to people, we got to be well informed about the side effects. And then also they're worried about supply chain and accessibility. There's backlogs for it, waiting lists in order to get the drug. And that's one of the excuses they use. I don't know. They just want that to clear up maybe. And then the other thing they mentioned is the cost is very, very expensive. So that's not typically, they're trying to offer people generic prescriptions, affordable things through their app. So they're just trying to figure out when and if they're going to be offering this GLP-1. It did sound like they will offer the GLP-1, but they said probably not at launch in December. And those are the things that are causing investors to be disappointed yesterday. And I don't know. My own opinion of this is I just think that's when you still are raising your full year guidance on the top and bottom line, like who cares? They're doing a great job. Like it's working. The price changes, they know what they're doing. And okay, so they might not offer GLP-1 at launch, or they'll offer it a couple months later. Like who cares? I don't know. So I'm not throwing in the towel right now. We're down on this and I'm going to wait for a bounce to get out. All right? That's the story with HIMS. All right, we're continuing to love Overstock. We're monitoring that. All right, I'm just going to show you two more. Assure, this worked out really well yesterday. I think we're still in this. We have like a 1550, basically yesterday's high day. That was the math, the re-rating that we did. It was right at 1588 or 1554, somewhere in there. So I'm looking for like 1550 to 1580, and then we're out on Assure as far as our swing shares go. All right, that's Assure. And then Tilray looking really good, man. Tilray getting a lot of press, by the way, a lot. Oh man, I can't believe Tilray's mentioned all over the place. That was I didn't anticipate that, but last night, overnight, it's all over the media because of the association with Budweiser and Budweiser selling all these brands to Tilray. So this has continued momentum over here. It's over the 50-week moving average right now. You can barely see it, but yesterday I told you once we're over the 50-week, 472 is possible. 440. This looks like what Carvana did a month or so ago, 3 months ago when we first spotted it, when it broke the 50-week moving average at 16, and we gave you like a 50 to 60 target and actually went there. So this is a possibility for Tilray. It could go to $4 to $5 over the next few weeks. Okay, no guarantees, very high risk. I heard Carvana had some good news this morning, by the way. Let's see. All right, very good for them. Had some good news off the 20 DMA. Hopefully that's going to be a sign of what's to come for RK and Overstock. Man, it's 9:28 and we're late. And Celsius was at the top of our list this morning, and that was the play. That's where it belonged. It's already up since we started our show over here. It's already up $3 for you. So we're leaving Celsius up there. SMCI, it's already up. I'm going to leave that up there at these levels. I think it's a good buy. Penn is just volatility, man. You know what? I'm going to take a chance based on what I told you, and I'm going to put Genie up here and also Twilio. Let's go to Twilio and then Genie. And then do it like this. Okay, man, it's late. All right, so I'm going to leave it something like this for today. Celsius, SMCI, like I don't know if it's going to hit that 280, right? By the way, ideal if it does. I don't know if it will. Okay, so I don't know. Maybe the right thing to do is pick up a little bit here, and then if it gets to 280, pick up more. Okay, so that's SMCI. Twilio, that's looking good for a 66 target. That's looking great. All right, then we have Genie and Apron. I think. But you know what? I'm gonna move Overstock above it. All right, and then Penn, just trade that thing. All right, that's gonna be fun. All right, guys. Good luck. Hope I gave you some good ideas. Take care. We'll see you soon. Definitely at 1 p.m. updates and 4 p.m. Zoom. Take care, everyone.